I'm Vikash Agarwal from Empathy Consulting. This is my first video from our new office situated at one of the iconic building of Ahmedabad, Stratum by Venus Group. Today, we are going to discuss about the new GSTR-3B return and the impact of the changes compared to the old return, not only from compliance perspective, but also from management and accounting perspective. So as you are aware that in the month of July, the Finance Ministry came up with the notification number 14/2022 dated 5th July 2022. And on the very next day, the Central Board of Indirect Tax and Customs came up with a circular number 170 for more clarity on this matter. Though there has not been any reference to the notification in the said circular, the circular largely covers the return related issues which are there has been changes in the notification. The primary objective behind these changes are correct accounting and accurate settlement of funds between the central and state governments. As you know that GST is a destination based tax, and the states had agreed to GST for implementation of GST based on some reimbursement to be made by central government. So the government found it difficult for settlement of funds between with the state governments with the current existing return mechanism. The second is ease of reconciliation between accounts and GST records for both taxpayer and the GST officials, which will also make the GST audits more efficient and litigation free, of course. And third is providing dedicated fields for reporting of special transactions like e-commerce transactions, ineligible input tax credit, reversal of input tax credit for regions like goods returned, suppliers credit note, excess or incorrect ITC taken earlier, then reversal of input tax credit as per first proviso to section 16(2), which means reversal on account of non-payment of invoice and tax for 180 days or more, and reclaiming of input tax credit which has been reversed earlier. Now let us understand these points in more details. Like what required the government to bring these changes, and what to especially what will be done by taxpayers, what could be the implication, etc. So the first change is a new table 3.1.1 has been inserted in GSTR-3B for reporting of e-commerce transaction. So why this was needed? So friends, as you are aware that when any transaction is covered under the e-commerce related special provision, there are certain situations when the vendor is not liable to pay the tax, but rather the e-commerce operator is liable to pay tax. So when that amount is reported in the regular turnover, there arise a confusion. So for that reason, all the e-commerce transactions covered under section 9 subsection 5 of the Central Goods and Service Tax Act, read with the corresponding state GST Act, are to be reported in new table 3.1.1. Here it is important to note that if it is the e-commerce operator which is liable to report the transaction on which e-commerce operator is liable to pay tax, then such transactions are to be reported in part 1 of the table 3.1.1. And likewise, a registered person making taxable supplies through an e-commerce operator on which that registered person is not liable to pay tax, but rather the e-commerce operator is liable to pay tax, such transactions are to be reported in part 2 of the new table 3.1.1. So all these e-commerce transactions are now not to be reported in existing table 3.1. Please remember, there shall not be any duplication. So the e-commerce operator transactions wherein only such transaction wherein the e-commerce operator is liable to pay tax are to be reported in 3.1.1, and such transactions are not to be reported in the existing table 3.1. So again, it is very important to clarify here that if any transaction is done through e-commerce operator wherein the vendor is liable to pay tax, this provision is not applicable, and such transactions are to be reported by the vendor in the regular table, the existing table 3.1 only. It could be B2B or B2C. Now this table 3.1.1, it is a very welcome change, and this was very much needed. This will save a lot of time of the e-commerce operator, e-commerce vendor, as well as the GST officials in reconciling e-commerce transactions and other taxable transactions with the accounts. And definitely this will help us to reduce the GST audit issues and query memos. Then moving next to the another change. The next change is related to reporting of ineligible GST amount, which was required to be disclosed in table 4D1. Yes, table 4D1. I am using the words disclose, not reporting. So yes, it was required to be disclosed as it had no mathematical implication on the net input tax credit amount. It was just a disclosure. It was just an informative thing in the GST return. Now, what was happening? Since it was made a disclosure, most of the taxpayers were either not disclosing it or disclosing it incompletely or inappropriately. So, what I mean to say by incompletely or inappropriately is that suppose if you are having any transaction wherein ineligible, suppose motor car related or employee insurance related, most of the times the taxpayer book that amount along with the tax amount. So the tax amount is subsumed in the basic amount while booking in accounts, and that amount misses the GST return, the disclosure in the GST return. So this was resulting in reconciliation issues during the GST audit conducted by the GST department and unwanted audit paras. So basically what happens that suppose if your vendor has uploaded something in 2A or 2B and you are not disclosing it in GST return or you were not disclosing it in GST return, it always creates a doubt in the mind of GST official or maybe your GST auditor that what had happened to this amount, especially if you are having a voluminous transaction and your reconciliation has not been done properly. It definitely creates a suspicious in the minds of the official that whether you had availed that amount. So I don't mean to say that it results in a liability, definitely not, but it certainly increases your work. So here the GST officials were also not at fault, as it would be difficult to get convinced that input tax credit of such ineligible amount was not taken, where a proper disclosure is not there and taxpayer is also not able to satisfy or convince the officer through a proper reconciliation. So of course, now with this change, it has been made mandatory to report the ineligible amount in table 4A as input tax credit taken and mandatorily required to reverse the same in table 4B. So now what has happened? It is no more a disclosure. You have to consider that amount as input tax credit taken and mandatorily you'll have to report it as a reversal item. So it is no more a disclosure. Now you have to first take the credit and show it as a reversal in table 4B. So now the question is how to ensure this compliance. It is very simple that you will add it in 4A and reduce it in 4B. But the important question is how you will capture the data. So it is very simple. If you are, it is very important that you change your accounting system to capture this ineligible GST purchase separately, which could be by means of creating new tax codes if you are following ERP like SAP, Oracle, or any customized ERP. And if you are a small business, you are using Tally, then it is simply you can do it by creating separate ITC ledger for such ineligible amount, which can initially increase a little bit of work, but that will be a very good control for you. Please note that not following this procedure may again result in unnecessary ITC dispute, as a GST official may again assume that you had taken the ineligible input tax credit and not reversed the same, even though you may not have taken such ITC. Hence, you have no other option but to update your accounting system in the above manner to ensure proper compliance to this system. It would not be out of place to mention that in the similar manner you can also identify inward supplies which are exempted or non-taxable, like suppose salt and or any food item, or for composition dealers or supplies from composition dealer, which are again required to be reported in GST annual returns and now also in your tax audit report as well. So this was the change related to ineligible GST amount. Moving ahead to another change, which is more important and more discussed in more details. The another change is related to reporting of input tax credit as well as reversal of the input tax credit. So before we talk more about this, let us have a background. Most of the people dealing in GST are accounting professionals who are firm believer of debit, credit and net impact, which is a well-established accounting principle. But it neither worked with the excise laws nor working with the GST laws. Yes, you got me right. I am talking about the reporting of input tax credit availment and reversal on net of basis in the GSTR-3B return. This is one of the burning issues now, and many tax officials are issuing crores and crores of even notice on this topic. So I don't mean to say that you cannot fight it, but the point is that reporting of tax invoice, supplier's credit note and other input tax credit reversal on GST portal on net of basis has resulted in lot of reconciliation issues and unwanted SOCOS notice. So you may fight, of course, you may fight such SOCOS notice, but then it is an added headache and an added administrative work, and definitely it takes away your monetary and time resources, which are very precious to any organization. So though it was not a no brainer, and proper reporting mechanism always existed in the GST law, the different practices necessitated a clarity on this matter. And finally, the finance ministry has responded through the above notification and circular. In the opening paragraph of circular 170 says that there appears to be lack of clarity regarding reporting of information about reversal of input tax credit as well as ineligible ITC in table 4 of form 3B. Then the paragraph 2 of the circular says it is desirable that correct reporting of information is done by reporting registered person in form GSTR-3B and form GSTR-1 so as to ensure correct accountal and accurate settlement of funds between central and state governments. It further says, accordingly, in order to ensure uniformity in return filing, the board, in exercise of its power conferred under subsection 1 of section 168 of the Central Goods and Services Tax Act 2017, hereby clarifies various issues in succeeding paragraph. These are the words of the circular. Again, the para 4.1 of the same circular says, it has been observed that different practices are being followed to report ineligible ITC as well as various reversals of ITC in form 3B, form 3 GSTR 3B. So here I would like to emphasize the use of the words in order to ensure uniformity, different practices used in the circular, which directly or indirectly means that the Central Board of Indirect Tax and Customs CBIC is considering these issues of reporting the net ITC as a matter of lack of clarity or as a matter of practice, and not as a non-reversal of ITC or as a non-compliance. And to bring uniformity, the board has exercised its power under section 168(1) of the CGST Act and mentioned in circular number 170. So therefore, a view may be taken then that reporting of ITC on net of basis may not be considered as non-reversal so far as up to now, and even the so-called notice, even if issued by any tax official, would be defendable. But from now onwards, if the input tax credit reversal is not disclosed correctly and separately in the dedicated field, then friends, certainly it would be considered as a non-reversal as well as non-compliance and may have financial consequences. So okay, so now let us discuss the changes in correct chronology. What are the changes? What is to be done? What could be the implications and all? So the first change is, though the description of table 4A has not been modified, the content reportable in table 4A has been specifically defined, and it is now meant for reporting of entire input tax credit as appearing in GSTR 2B, including the ineligible amount, but except ITC input tax credit restricted as per section 16(4), that is ITC uploaded by the vendor after the due date of taking ITC due to late filing of return or for any other reason, and except the ITC where place of supply is different state or union territory. That is, it means that if you are registered in the state of Rajasthan and the credit belongs to Maharashtra, certainly then you are not eligible to take such credit. So you may notice that both these exceptions relates to permanent ITC reversal, or rather permanent ineligible amount. These are ineligible by permanently. You cannot claim this amount of ITC today or even tomorrow. So when the restriction is permanent, there is no need to report that amount in table 4A. Rest all the amount you can report, you must report in table 4A. So here it is important to note that ITC not claimed up to August 2022 for the reason that goods, services or invoices were yet to be received by the taxpayer also needs to be added in table 4A. It is not that this practice is to be adopted as a way forward. It is to be adopted for period prior to August 2022 also, which even you were always already doing otherwise. Another change is that both the above exception are to be disclosed separately in table 4D2 now. So above exception where what? Above exception where ITC restricted due to section 16(4) and ITC not eligible due to place of supply. Now you are mandatorily required to disclose this amount in table 4D2. Again, this is a disclosure. Mind you, the word is disclosure. This is not reported. This is not mathematically used to calculate the net ITC, but you are mandatorily required to disclose it. Again, why? For it is for the reason that failure to identify such amount and non-disclosure in table 4D2 may again lead to assumption by the tax official that such amount may have been considered as eligible item, and you might have retained the ITC benefit of same, which in turn increase the reconciliation work and result in unwanted notices by the GST department. So this was it. So this is a disclosure only, but you have to mandatorily disclose it in 4D2 to avoid any dispute and avoid increased reconciliation work. The third is table 4B1. Table 4B1 has now been modified for reporting of reversal of input tax credit under Rule 38. So it is ITC reversal by banking company or financial institution. This was not there earlier in table 4B1. Another is reporting of reversal of input tax credit under Rule 42 or 43, which is basically reversal of input tax credit on inputs, input services and capital goods in proportion to of your exempted and non-taxable supply to the total supplies, total outward supplies. And third reversal, which is to be reported in table 4B1, is most importantly all your block credits as per section 17(5) of CGST Act, which you have again already shown in table 4A as your eligible ITC, or rather I'll say not as a eligible ITC but as ITC taken. So now the circular further clarifies that table 4B1 is meant for reporting of all your permanent reversals which cannot be reclaimed in future. So you will see that all this amount which are to be reversed under and reported in table 4B1 rule related to rule 40, 38, 42, 43 or section 17(5), all of these are permanent reversals. You can never reclaim this amount. So the circular also clarifies this, and you can also categorize this amount as permanent reversals which are cost to your company. Now that this clarity have been made, non-disclosure would again certainly lead to assumption by the tax official that it is a non-compliance or non-reversal, and it will lead to unwanted notices and with interest and penal consequences. So better you identify this amount and report it in table 4B1. So what I mean to say is, when I say that non-reporting of this amount, there might be a situation that after these changes yet you don't consider the ineligible amount in your table 4A, and in turn you don't reduce in table 4B1. By doing so, you may defend your case in future if by mistake it happens. But again, it is suggested that you update your accounting system so that these kind of amounts are properly identified and properly disclosed properly reported in table 4A and again in table 4B1, largely for the reason that your ineligible amount is appearing in GSTR-2B also. And suppose if any amount is appearing in 2B and not reported in 4A and 4B1, 1, then it will create suspicion in the mind of GST official, and it would be very lengthy exercise of reconciliation to convince the officer that okay, you have not availed such credit and hence you had not reported in 4B1. So now moving ahead to the another change, which is table 4B2. Now table 4B2 has been modified for reporting of reversals other than those reported in 4B1. And what are those reversals? Those are like reversal of input tax credit since taxpayer is not in possession of tax invoice or debit note or any of their duty paying document like bill of entry, which are covered by section 16(2) clause A of the CGST Act. Another is reversal of input tax credits since taxpayer has not received the inward supply itself, which is covered by section 16 subsection 2 clause B of the CGST Act. Another is reversal of input tax credit due to non-payment of invoice for 180 days or more, which is restricted as per second proviso of section 16(2) of CGST Act. So the table 4B2 is meant for reversal of input tax credit, which is temporary, and you can reclaim such amount in future when you have received the inward supply or you have received the related invoice or tax paying document, or when you have paid the consideration or tax amount to the vendor after non-payment for 180 days or more, which was earlier reversed. The next amendment is table 4D1. Table 4D1 has been modified and meant for disclosure in input tax credit reversed and reported in table 4B2 earlier and is reclaimed now. So above we have seen that temporary reversals, which are timely reversal, which are having timing difference, you are reversing as of now only for the reason that though it is appearing in GSTR-3B, but you have not received the inward supply or the tax paying document. So suppose when you receive the inward supply or when you receive the tax paying document, where to claim? You will claim in table 4A certainly, but to identify that this much amount in table 4A is related to amount reclaimed, you have to disclose that amount in table 4D1. Remember, I am saying disclosure. Table 4D1 is disclosure. It is not used for computation of input tax credit amount, but it is important to disclose here to define that out of credit taken in 4A, this much amount is reclaimed amount, so that remaining amount in 4A is only matched with GSTR 2B. If you don't make a proper disclosure in table 4D1, then your amount in table 4A will exceed the comparable amount appearing in GSTR 2B, and that would be considered as mismatch and again attract unwanted notices and queries from the GST department. Here arises a question. The table 4B2 is effective from August 2022. So a taxpayer might not have availed ITC or may have reversed ITC for similar reasons like non-receipt of inward supply or non-receipt of tax paying document and all, or non-payment for 180 days and all in any earlier tax period prior to August 2022, and may re-avail the same in the current tax period, that is in August 2022 or subsequently. So the question is whether such reversal of earlier tax period reclaimed now is also to be disclosed in table 4D1. The answer is no. Why no? Any such amount for any tax period prior to August 2022 and availed now is not to be disclosed in this field, in this new table 4D1, for the reason that this field is not for the purpose of computation of ITC, but only to keep a control that maximum amount reclaimed in this table does not exceed the ITC reversed in table 4B2. So if you report that old reversal amount here, it will exceed table 4B2. So that may again create queries in the with the tax official. But again, when I say that you don't have to report such amount here again there is a catch. If you don't report that amount here, then again table 4A will exceed in in the sense in the sense when you compare the corresponding ITC amount reported in GSTR-2B. But there you have answer to that. What answer you have? That that amount is appearing in GSTR-2B of a period earlier to August 2022. So to that extent, you will have to keep a backup reconciliation for the GST officials whenever this matter comes up, or whenever the GST auditor comes for auditing of the said period. So friends, I hope that this you found this video informative. All the changes in the new GSTR returns have been discussed above, and I have clarified in details. If you still find it difficult to understand, you may please call us, you may approach us. My number is 9512551980. I'm representing Empathic Consulting Private Limited. My email is vikash@empathic.consulting. You feel free to contact us. We'll definitely revert to your all your queries, and soon see you with another video on any other interesting GST matter. Thank you. Goodbye.